So I'm the senior partner of the Penta Wealth Management Group at UBS Financial Services. We have a team of professionals that serve high net worth individuals and families, helping to manage their investment assets, but also doing all the financial planning as well. So we do all the front end planning to help them quantify their goals and dreams, and then we put a plan in place together for the optimal portfolio for their investments to help them reach those goals. We also work with a lot of business owners and entrepreneurs, and we help their companies as well. This has been a focus of mine for the last 5 to 7 years. We do have many clients that are not necessarily a business owner or entrepreneur, certainly a lot of retirees, a lot of corporate executives. But on the business side, we do get involved in helping companies with things like raising capital, growth path strategies, transitioning their company, selling their company, things like that.
I think most investors are concerned about their portfolio. What do you think are the most important things people need to look at for 2019?
Yeah, so I'll give you a few. There are obviously several, and you could dive pretty deep. But at a high level, the Fed would be one. What is the Fed going to do? There was justification behind their rate hikes last year with the economy growing, companies growing, and the Fed did raise rates, as we all know. So I think that the concern on Wall Street is that the Fed doesn't raise rates too quickly and too aggressively.
Right.
So that's a concern for 2019. As long as the Fed raises rates slowly and gradually, and in a controlled fashion, and as long as there's no surprises, to both Wall Street and the economy, things should be okay for the market. In other words, that it shouldn't have a huge negative impact as long as the Fed does what we think they'll do. Another area of focus for us, and the message that we send to our clients, is just focusing on the fundamentals that should drive the market, meaning there's a lot of noise out there that can get people excited, whether it be trade wars and China and Trump and politics, and which is all important to consider. But the most important driver of the market over time are the fundamentals. So PE multiples, corporate earnings, healthy balance sheets, and all of that looks pretty good. The GDP growth, looked good. The jobs report that came out at the beginning of the year looked pretty good. So we expect that the markets, and this leads to another area, is what will the market do? So for 2019, I think a concern for a lot of people heading into this year is the stock market. In particular, because there was a sell-off, as we all know, at the end of the year, where half of November and most of December, the market was down quite a bit. So a lot of investors were concerned, is this the start of a new bear market? I can't tell you how many clients asked me that question. We don't think so. We think at least for the first half of the year, the stock market will be up. And then we'll have to see at the second half of the year what the market does. But at least for the first half of the year, for the next 6, maybe 8 months, the market should be more up than down. And then lastly, an area of focus for us is asset allocation. So even if the markets do remain choppy, even if the markets do remain volatile, there are always pockets. We call it market dislocations, and we want to take advantage of those dislocations in the market. Asset allocation and the proper optimal portfolio weightings in each of these different pockets, different asset classes, subclasses, and sectors, we can actually still do pretty well for a client if we are properly weighted in the right areas. So that means overweighting the areas that we think have more upside. It means underweighting the areas of the market that we think will have more downside.